What's up to all my entrepreneurs tuning in? You are watching Minding Your Biz with me, Ivory Orr. And today we're back with another stock market video. And we're going to talk about some terms that you probably heard before and probably sound really complicated before. But after today, they're going to be really simple. Today, we're talking about the Nasdaq, the Dow Jones, and the S&P 500. Let's go. Thank you for watching Minding Your Biz with me, Ivory Orr. Now, this is the channel where we talk about building wealth. If that's what's important to you, then do me a favor and hit that like button, hit that subscribe button, and hit that notification bell. Now, one of the biggest ways of building wealth in this country is the stock market. Now, I'm sure if you've ever watched the news, then I know you've heard the term Nasdaq, Dow Jones, S&P 500. And if you're like me, I used to watch the news and didn't have any idea what that meant. And the newscaster never took the time to break it down. They just assumed that if you were watching this business news, then you already knew what it meant. So for me, that was just time to change the channel. Well, that's a thing of the past. Today, we're going to break it down. Let's get started. Let's start with the Dow Jones. Okay, so Dow Jones actually represents a couple of different things. Now, Dow Jones and Company is one of the biggest financial and business news providers in the world. But when it's related to the stock market and you hear people say the Dow Jones or the Dow, they're talking about the Dow Jones Industrial Average. And all that is an index or list of stocks whose prices and performance is being tracked by a company, in this case, Dow Jones. Now, the Dow Jones Index consists of 30 blue chip stocks. When you hear the word blue chip, all it means is the big dogs. So the Dow Jones Index consists of 30 huge companies like Apple, Chevron, Boeing. I mean, the biggest of the biggest companies. These are the companies that are tracked by Dow Jones. Now, what the Dow Jones Industrial Average does is they take the stock prices of these 30 companies that are across all kinds of industries, and they take an average of that price. And they use that average to determine how well the U.S. economy is doing at that time. Now, many brokers or fund managers will take that Dow Jones list of those 30 companies and sell you all 30 companies in a bundle, right? In an index fund or a mutual fund. And they sell it to you for one price. So that's the Dow Jones. Now let's talk about the Nasdaq. Now, again, Nasdaq can refer to a couple of different things. First, it could be talking about the Nasdaq exchange. The Nasdaq exchange is basically an electronic stock market. It's a global electronic marketplace for buying and selling securities. Okay, now that may not seem like a big deal now because everything's electronic, everything's computerized, right? But it was created back in 1971 by the National Association of Securities Dealers. Now, before 1971, buying and selling stocks was a slow, inefficient process. The Nasdaq exchange was created to fix that problem. Now, the Nasdaq exchange includes over 3,000 stocks in 50 different countries. So it's basically, like I said, an electronic version of the stock market. Now, when people talk about the Nasdaq, they could also be talking about the Nasdaq Composite. The Nasdaq Composite is simply just like the Dow Jones. It's an index or list of stocks whose price and performance is being tracked by a company. Now, again, with this list of stocks that's on the Nasdaq, you can buy it or sell it in a bundle, which is called an index fund or a mutual fund or an ETF, exchange traded fund. And last but not least, we have the S&P 500. Now, if you've watched my channel before, then you've heard me say that term before. The S&P 500 is yet another index. It's just a list of the 500 biggest companies in America. Now, one thing that does make the S&P 500 a little bit different from, let's say, the Dow Jones. The Dow Jones focuses mostly on price. So the higher your stock price, the higher you are on the list for the Dow Jones, right? with the S&P 500, it does take price into consideration. However, it puts more of a weight on market capitalization or market cap. Now, what is that? All that means is the total value of your company. Now, how do they calculate the total value? Well, that's calculated by taking the total amount of shares that you have available to purchase and you multiply it by your stock price. So let's say you got two companies, right? Company number one, their stock price is $10. Company number two, their stock price is $10. Are they worth the same? Well, let's look at their market cap. Company number one has 10 shares available to purchase, right? At a price of $10 per share, right? That's $100. That's their market cap. All right. Company number two has one share to purchase at $10 a share. That's $10. Their market cap is $10. So company number one would be higher on the list in the S&P 500 than company number two. And again, just like the others, the S&P 500 is used to indicate how well the U.S. economy is doing at any given time. All right. And just like the others, the stocks that are in the S&P 500 in that index can be bought at one time in a bundle via a mutual fund, an index fund, or an exchange traded fund, also called an ETF. So these concepts are very similar, but they do have their slight differences. Okay, so next time you're talking to your family members or your coworkers about your 401k and they start talking about stocks, you can break down to them what the Nasdaq is, what the Dow Jones is, what the S&P 500 is, and you can look like a real boss. Just make sure you give your boy some credit and make sure you hit that like button, that subscribe button, and that notification bell so you know the next time I drop a video and you'll be the first one to watch it. Until that time, thank you for watching Minding Your Biz with me, Ivory Orr, and I'm out. Peace.